Stocks closing out what can be described, well, I was going to say only as a dismal. There are lots of other pejoratives we could add to the quarter. Sharp losses on concerns of rising inflation in Europe, instability in markets, falling incomes here in the United States. The list goes on. In other words, it was a lousy, lousy quarter for investors. The Dow Jones Industrials down 240 points today. The S&P lost 29. The Nasdaq down 65. $2.5 trillion in market cap wiped out in the third quarter. And they're talking about what in Washington? $24 billion separating great minds. 5 stocks taking much of the blame for half of the Dow's 1,500-point decline over the past quarter. The worst performer, Caterpillar, followed by 3M, United Technologies, DuPont, Hewlett-Packard. Do you see a theme? And meanwhile, the Commerce Department reporting personal income fell in August for the first time in more than 2 years. But consumer confidence, despite all odds, ticking up this month. Joining me now, tonight's Market Masters, Euro-Pacific CEO, Chief Global Strategist, Peter Schiff. Peter, how are you? And he is the author of the book, How an Economy Grows and Why It Crashes. Moody's Chief Economist, John Lunsky. John, great to have you here. What a mess, what a travesty this quarter. I was today asking my audience on radio, name one thing that the president said in support of market stability and positive, strong leadership on the issue of the markets, just in the past 3 months. I didn't get a single response.
That's true. You know, talk is often deemed to be cheap. Perhaps we need more in terms of action. We maybe need some more help on the regulatory front in order to encourage those small businesses that account for the far majority of jobs growth in the United States.
Peter, your thoughts?
Yeah. Well, you know, 2 words come to mind that might have helped. I resign. But, you know, one thing that that you left out in those bleak statistics, too, from today, the savings rate dropped all the way to the lowest it's been since late 2009. People are struggling in this economy just to keep their heads above water, and unfortunately, it's going to get a lot worse.
Do you agree with that, John?
Yeah, I want to add, though, it seems as though the market has priced in an awful lot of bad news. I think the market's priced in a 25% plunge by profits. Look on the high-yield side. We now have a high-yield bond spread that is definitely in recessionary territory. The high-yield bond spread is expecting the default rate from rising from the now 2% to something perhaps approaching 10% fairly soon. We don't think that that's going to happen. And I will add that never before in the history of the high-yield bond market have we had such a widespread credit spread over treasuries in the context of a well
this is not because of the market. This is the Federal Reserve manipulating interest rates. You've got a lot of people moving into the bond market for the wrong reasons. And, of course, when the quarter began, a lot of people had false optimism that the U.S. economy was growing. Now people are coming to the conclusion that it's relapsing into recession. And I think that's responsible for what's happening.
You know, a lot of the problems are coming from Europe. There's a great deal of worry as to whether or not there might be a disruptive default by a European sovereign. And I think
I think we have more homegrown problems than anything that might be imported from Europe. And I think right now, I think the European problems are actually benefiting us in the short term because that's driving money into the dollar, into the bond market, which is sparing us some of the pain. But I think when Europe really deals with its problems, I think that's when we're going to confront ours in a much bigger way.
Well, I think the reason why securities appear to be so badly underpriced relative to fundamentals is because of all of these worries, all of these unknowns emanating from Europe.
Right. The idea, Peter, that Europe is not the problem here. When we look at the Treasury Secretary showing up to support the IMF, to support the European Financial Stability Facility, and to see it raised to 440 billion euro, that'll be a third participation by IMF. Our money again will be thrown into that. It looks like there's considerable fear about stability in the Eurozone.
Yeah, well, I think the president would like to scapegoat Europe for our problems. That way he can seem blameless. After all, what can he do about what's going on in Europe?
I haven't heard President Obama say a single word about the Eurozone banks or their regulation. Geithner is over
No, but
there
they
giving
talk
them the
about it. The
benefit of his
administration
wisdom.
talks all the time about problems that are beyond its control. Either it inherited it from Bush, or it's something happening in Japan or with the earthquake, or in Europe. Everybody's looking for somebody to blame. Nobody in Washington wants to accept responsibility for the problems.
Well, it's up to us to hold them accountable, I think, is the way forward here. Peter, very quickly, what do you see in the market through the remainder of this year, the stock market?
Look, I think the markets are going to be weak until they get what they want from the Fed. I mean, this Hail Mary that they threw with Operation Twist is going to fall short of the end zone. What they want, unfortunately, is more QE. I think they're going to get it. It's bad for the economy. It's going to create more inflation, but Wall Street will like it. Stocks will rise. I think Peter just said we're going to have bad,
commodity prices will rise
more. Gold will rise more.
Peter, are you talking over me or am I talking over you? Because one of us should
I didn't hear you. Go ahead.
Very quickly. What do you think of the markets over the end?
Well, markets will continue to decline until policymakers in Europe do the right thing. You know, meanwhile, I think that the fundamentals in the United States are not as wretched as recent stock price performance indicates, as a VIX index that's practically stratospheric might be telling us.
Yeah, and the way my stomach feels as I watch these markets, I would be astonished if that volatility index weren't high.
You know what we forgot about today? The Chicago PMI broke above 60. We could get a positive surprise next week on the ISM Manufacturing Index, as well as jobs growth.
Yeah.
I would love to get
I wouldn't expect a lot of jobs growth next week.
Well,
so
maybe 100,000, but you know, that's worth celebrating these days.
And you know,
better than zero.
People say that economics and business are dull. You guys make it absolutely fascinating. And by the way, you know, bringing passion to such dull things, it's not so dull, is it? Especially when it's your money. Thank you very much, Peter Schiff, John Lonsky. Thank you, gentlemen. Up next.